Hello everybody, welcome back to the channel. So today we are going towards heads of accounting, which we also know as pillars or elements of accounting. So these are the foundation stones that make accounting clear and reliable. So there are assets, expenses, revenue, liability, owner equity, right? So in detail we are going to know about each of them. So first, let's talk about assets. So things a business owns, right? Those things that are owned by the business. But there are two types of assets: tangible assets and intangible assets. Tangible assets are those assets that are physically present, and intangible assets are those assets which are not physically present. Intangible assets, there are two types: current assets and non-current assets. Current assets are those assets which has a life of 1 year, but in non-current asset, as you can see, I have mentioned that it has a life more than 1 year. Now I'll tell you that what type of title of account does current asset and non-current have. These are called the title of account, right, which we are going to use in our journal entries. As you can see here, cash is written, bank is written. Cash which is in hand, bank which the cash which is in the bank, right? It is our asset. Then account receivable, those accounts that like I have a customer who has purchased some stock from me, but he is reliable and he said that I will pay you in the future date. So the amount that I am going to have in future, that is my account receivable. I didn't get any payment, but in future I'm gonna have that money, right? Same like that, bills receivable and note receivable. Then we have prepaid expenses, those expenses that like I have a rented shop, so I paid the rent for a year, but in that year I have only utilized the beginning 3 months, but the remaining 9 months are the prepaid expense that I am gonna use in the future. It is not like used, but I already paid for that. That is prepaid expenses, right? After that, office supplies, of course, those are my assets. I am using my because I am giving you example of a business that I am running, right? Then we have inventory, whichever stock you have in your business, the beginning of that financial year, the inventory you have is your asset, right? Then we have non-current asset. As I told you before, that non-current assets have more than 1 year life, right? For example, here as you can see, land, building, furniture, equipment, a shop, machines. So these are kind of non-current asset. Of course, we know that land has a value more than a year, right? Now let's talk about intangible assets, which are not physically present, but those are our assets. Now the first is goodwill. So goodwill is a reputation of a business, like good or bad, right? Then we have trademark. It's like that, allowing other businesses to use our logo, slogan to run their business, right? It's kind of like small businesses who use your logo and slogan, all that. Then we have copyright. Copyright is like allowing others to sell our products, right? And from which we will charge money from them, right? They will use your products to sell out, but in that case you will have money, right? Now franchise, like we have seen many times, like KFC franchise, McDonald's, Pizza Hut, and more brands, which gives permission to other brands to start business, right, with with their name, using all of their services. So it's like that. Now let's understand expenses. So as I told you before, that whatever I have mentioned here are the title of account, right? These are the title of account which we are going to use in the journal entries. Now let's understand expenses. Cost is meant to earn income. For example, here as you can see, purchases. For example, I have purchased a furniture for my business. So it is an expense I did, right? So the asset is coming in, but for that asset I have paid. That is an expense, right? Then we have purchase written an allowance and purchase discount. For example, for that, because they both are contra expenses. What are the contra expense account? It is an account that is used to offset or reduce the balance of a related expense account, right? And contra expense account are typically used to record refunds, rebates, or other reduction in the expense. For example, I have purchased 6 chairs, but in one chair there is something default, and that's why I have to return it to the supplier. So in that case, maybe my money has return, or maybe the supplier will give me a discount on that. Now as you can see here, there are, I have mentioned rent expense, insurance expense, salary expense, utility, commission, interest fee, and many more. So these are those expenses that I have to pay. Company has to pay salaries every month, right? So it's an expense that has to be done every month. Now we have carriage outward. For example, I have an business of like heavy machinery and all that. So customer has give me the quotation and all that, and I have to deliver it. So the cost of delivery, the cost of transportation and all that, it's gonna be included in this carriage outward, and it is my expense, recorded as an expense. Now let's talk about revenues. What are the revenues? Revenues are the sales of a business, right? We have here sales return and allowance, and then we have sales discount. So here as you can see, I have mentioned both of them as a contra revenue. Sales return and allowance, it's for the supplier. Then we have interest income, commission income, rent income, fees income, and others. So it's like that for example, interest income. I have a business, and in a business I have invested in some small business, right? And for from that I am gonna have that interest. So now as you can see, liabilities, and liabilities are what the business owes, like loans and long term, short term loans, unpaid bills, creditors, and all that. Let's understand it deeply. um they show the obligations, right? Liabilities shows us the obligation, helps to know how much is due to the outsiders, right? So there are two types of liabilities, as you can see here: current liability and non-current liability. Just remember, whenever you see the word current and non-current, it means current means 1 year life, and the non-current means more than 1 year life, right? Now just like understand the title of account that liability have. Now as you can see here, account payable. Account payable is the account that has to be paid within a year. For example, I'm a wholesaler, right? And I have a business of clothes, and I want to restock, and I went to the supplier, another supplier, and asked him for the stock and all that. But I have a good relationship with that supplier, and or maybe not, right? Maybe I'm a and with the and with that supplier I have a good relation. I have asked for the credit time, like maybe in the future date I will pay you, and all that scenario. So I have given him a date that I will pay you in that date. So that amount is gonna be my liability, because I have to pay it within 1 year, right? Now Same goes for the bills payable, notes payable, salary payable, right? Salary is often employ that is payable as a owner, as I'm a owner of that business, so salaries are payable. I have to I have to give the salaries to the employees, right? So it's a liability on me. Unearned income or advance from the customer. For example, a customer has, I'm a service provider, and the customer has already paid me in advance, and I'm a painter, right? I'm a painter, and he asked me to paint all that shop and all that. So he give me advance payment, and for that I haven't done that work, but the customer already paid me in advance, so it's a liability because I haven't done it yet. So it is unearned income, right? And unearned income is my liability. Now we have bank overdraft. Like you have, maybe you heard that a good business have a good history in the banking system. That customer has a limit from the bank to pay it back, so it's in bank overdraft, right? Then we have short term loan. Short term loan are like we have lenders that lend money to us for 1 year, so it's like within 1 year we have to pay them back. Now let's talk about non-current liability. As we know, bank loan are like loan is just like that, my company, my business, right? I'm running ABC company, and company has bank loan, and I have to pay it, like I have 2 years, so it's a liability and I have to pay in 2 years. So it is a non-current liability because I have a time limit which is more than 1 year, right? Then we have bonds payable, which is mainly used in US, debentures payable, which are commonly used in UK. And then we have long term loan, which we have a time limit of more than 1 year, right? Now last head of account is owner's equity, and in owner's equity there are capital and drawings, right? But in capital, as you can see, there are two types of capital, which is owner's equity, which is the whoever the business owner is, his money is the equity, but debts are that money that are others investment in your business, in that business. And drawings are known as the cash from the that business which is used for your personal use. Here, before we start, rules of debit credit, which is very easy to understand, but for that I will recommend you to understand first 5 pillars of accounting, because it is the most important topic of the accounting, and without it you cannot understand the future topics, right? I As I have mentioned this before, and you can rewind the video and go ahead, understand it properly. Now let's understand a rule of debit and credit. Just remember, these are the 5 heads of accounting, right? And there is a pair of asset and expenses. Just remember, whenever they increase, they are shown in the debit side, right? Whenever they decrease, they are shown in the credit side. And the opposite of this, revenue, liability, and equity, whenever three of them increases, they are shown on the credit side, and decrease of them are shown in the debit side. This is very easy to understand this chart if you understand pillars of accounting.